Hello, this is Cryptolyze. I hope you are well. This Sunday, November 5, 2023. Today we are going to talk about BTC. We are going to do a little psychology overview. I think it's important in a crucial moment like we're seeing right now. We've just survived. At this bear market, we have just passed a period of lethargy, and we are starting to talk about bull run. And it's essential to keep your feet on the ground, to know where you are, and to know how you react psychologically to different news. And that's really important at a time when, in fact, we're going to have more and more communication, and we're going to try more and more to make you think differently than what you really think. I'll explain everything to you now. As a reminder, you always have the possibility of having free access to the educational course, which is a 60-hour training course worth €400, which allows you to learn blockchain, crypto, investment, technical analysis, trading, everything to become profitable. Through 130 videos, 400 pages of guides, quizzes to find out where you are in your progress, and all for free. To have access to this lifelong training, simply use the platform of one of our partners. Everything is explained in the comments and descriptions. If you watched the video yesterday, you are a little familiar with the communication cycles I talked to you about. We had the notion of bull run here, the notion here of 10,000, and the notion here which is emerging of bull run. And here we had the notion of 15,000 or even 10,000 also coming back, which are communication cycles. It's the same here, we said 150K, okay? So it is these communication cycles which are very strong and which will increase the more we arrive at significant volumes. It is very important to understand how it works so that you can distance yourself from it and not be fooled. Because the people in general who are going to be there will want to get into this notion of confirmation bias. Confirmation bias is wanting to see only the way we see the way we think. That is to say that if I think that I am bull, if I think that I am bear, I will only see this information which confirms my own bias. And it's very important to have that, because it also means that we will have this communication which will be focused around that. We will have the refusal of a different thought. This means that if we ever see content, listen to, read, or discuss with someone who doesn't think the way we think, or even who has an opinion totally different, we will be in confrontation or even in rejection or even total refusal of the existence of this opinion, and it is very important to be aware of it in order to be able to take a step back. As a reminder, when you are in trading or even when you are in investment, the goal is to balance, to manage your exposure according to your management of your emotions. The goal is to be sufficiently exposed not to overreact in the event of an increase, sufficiently underexposed to be able to react in the event of a decline. It's knowing the areas in which we will interact. And that's important because there is no magic formula. Many of you have asked me the question over the last 6 months in the comments, what is the right exposure? Should I buy? Should I sell? There is no perfect answer to this. It will depend on your management of emotions. And if you don't understand that, you're already missing out on a lot of things. Because you really have to systematically position yourself with the following reflection. How would I react if something like this happened? How would I react if something like this happened? Same in an ultra bull scenario. We make 3-4 huge candles in which we make a new AT8. How will you react? Are you getting enough exposure? Are you going to overreact? Are you going to buy? Are you going to sell? Likewise, if you have a disaster scenario and you go for the 10,000, then the 15,000, and then the 10,000, how do you react? Are you going to sell directly? Are you going to repurchase? Are you going to have the ability to buy back? And it's very important to actually be prepared for these scenarios and to be prepared for each area of intervention to be able to be emotionally ready, to have a plan in advance. And it's not actually being a bull or a bear to do that. It's just being intelligent in the way you invest, in the way you trade. Here again, there are two separate things. Because we always make an opposition between the investor and the trader, except that the risk management between the two is almost identical, except that the trader has a risk management which is generally more aggressive, and that the trader, even we make a generalization in traders by saying that the trader versus investor, but even the trader himself, there are several types. There is the swing of agreement, which will have temporalities which will be from the week to the month, or even maybe even sometimes more a quarter, and we will have day traders or scalpers next to us. So scalper is mostly within an hour, 2-3 hours maximum in terms of position. Already that's huge. And day traders, generally it's 4-5 hours or even a day, but we never leave a position open for more than 1 day. And when we see that already, the reflection, it is different, and you will tell me, yes, but I am an investor. Why do I need to concentrate on that? Quite simply because whether you are a trader or an investor, the impact of the price on your emotions will be identical. We print a 20% candle on BTC, I can tell you that you will feel it. Same. You print a minus 20% candle in it, you're going to feel the same emotionally. And you have to be ready to handle that, whether you are a trader or an investor. This is truly the key to success. Define your areas of intervention, define your scenarios, define your exposures to each of the blocks, and how you are going to manage that. There is no magic recipe. There is just the recipe. Your recipe in relation to your emotional cycle, how you are able to sleep, how you are able to react to emotion. There are some who get carried away. There are some who are rather placid, therefore who are not going to do absolutely anything. You really need to have defined your strategy. Without it, you won't be ready. Because if we take a slightly longer-term vision and step back with the candles, which represent 12 months, well, we know that we are off to a good start on the bull run. When we look historically, we have a big red candle. And then we have 3 green candles. Big red candle, 3 green candles, big red candle, 3 green candles. I remind you that my bull run start is here, okay? But that doesn't mean that in the meantime here, we can find ourselves on what we call a checkout. We can find ourselves on, or even lethargy, or even why not a slump before leaving, or even simply an acceleration. In fact, all scenarios are possible. There is no truth. People who consider that they have a truth, generally, that means that they consider that there are certainties in the market and that they are missing the point, that they are really very, very far from it. How a market works, and especially a market like cryptocurrencies, which are still different. And in fact, let's talk about the difference in the cryptocurrency markets. There is something that is really important, particularly on Bitcoin, which is that we have a really strong notion of community. What does it mean? This means that the notion of FOMO is much higher in crypto than elsewhere in the markets. And that's why you're going to have communications that are going to go up. Whether it's in video comments, whether it's in the videos, whether it's on Twitter, whether it's in the press, where we're always going to tell you add a bias. Whether it's here in this part telling you, don't worry, we're going to go back up there. We won't break this area, it's bull time, because we're trying to encourage purchases, to try to revitalize the situation. And we try to recreate FOMO, to recreate an acceleration of bull run, because we are also in a phase of massive denial. Here, the same, we are in a continuity of decline. And so the bulls disappeared because they left from the end. There was the break. Here, so all that remains is the bears, and the bears in themselves do not see a bullish scenario, and therefore they are trying to push you to have either an indefinite wait to get the tank or a downward pressure. And what do we find ourselves in today? In a bullish return. So we have the bulls who are coming back versus the bears who are confronting each other. The important thing is not to be one or the other. It is above all to have good prepared this part, in which here, if you followed the chain, you have accumulated well. Here, too, you have accumulated well. Whether it goes up or down, you are normally ready whatever happens, and don't let yourself be influenced by telling yourself that tomorrow it's going to burst, or the day after tomorrow it's going to burst, or tomorrow it's going to go to tank, why I'm going to buy now, because it's going to go down to 15,000, or why I'm going to sell now, because it's going to move to 50,000. Define your strategy. Do not let yourself be influenced. You must be exposed, as I have already told you for some time, if you have the conviction of Bitcoin and cryptos in general on the evolution of blockchain technology over the next few years. You need to be exposed. At no time are we going to say to ourselves, I'm going to sell my BTC to try to buy them back there. This type of comments or this type of thing is very common, whether on Discord, in comments, on Twitter, private messages that I receive, but almost all days, so you really have to take a step back from that. No, we don't sell to buy back lower. Or at that moment you are trading, and you are trained, and you are psychologically strong to be able to do it. And you accept the fact that if you sell here to buy at 15, well, there it was more like 23, 25, or 15. Well, in this case, it's if you ever miss the boat, you're missing out completely, okay? So you have to be on board. You also have to accept the fact that you could be wrong. And that's important. And I would really like to take a little time from that, because being wrong, we see that as a bad thing. I want to tell you, being right or wrong doesn't really matter. What's really important is to be prepared for the likelihood of being wrong. And that's really the most important thing, and that's the limit of what we can take away from that. You're right. That's good. You're ready to be right, because it's something you planned. But are you ready to be wrong? Likewise, when we have a strategy, we plan the invalidations. We plan the validations. We plan what we do when we are right. And no matter who is FOMO or FUD, you are prepared. Because FOMO and FUD are going to be general. And I can tell you that when we really go into bull run, because at the moment, if we take a step back once again, we can clearly see the typology of candle, acceleration, big candle, and big renovation of this candle. Same, here is the first candle in which we have a large part of the wick, which is at the bottom, okay? Take into consideration that the start of the bull run is more this and that, okay? These are really candles that are full, filled, in which there is almost no wick. That's bull running. And this is something where we are really going to have communications which are going to be very violent. That is to say, we are going to push you to use false words. We are going to tell you, but don't worry, we aren't going to present you with a shitcoin. We're going to tell you it's the super revolution, while behind it, it's a big Ponzi. And if you don't get out at the right time, you're going to get ruined because behind people are going to dump on you. And we really have to be careful. Take that into account. We have already experienced a lot. When we look, we have experienced here this first bearish impulse with a real crisis at the level of equity. So something which has really bad. Here we had Terra Luna, this whole part, Celsius, FTX, SVB as a reminder. We still really had things that were very difficult emotionally. If we survived this part, there's no reason we shouldn't be emotionally ready for the rest. And it's not because we experienced a bear that we are ready for a bull, on the other hand. That's very important. On the other hand, what you experienced in the bear market should give you enough perspective to be ready, to prepare yourself psychologically for the bull market. It's going to be different. We won't have to rush. We'll have to breathe, take our time, and above all, be ready. Be ready with our different strategies, our different levels. And that, there is no answer. There is no one who will tell you what to do. It's going to be you in relation to your management, emotion, grid management, and so on. And I'm going to end this video on an important point. Currently, we meet here. A bullish acceleration after a zone of lethargy which lasted for a certain time, a bear market, breakout zone, lethargy, bullish acceleration. Okay, this still looks a lot like the start of a bull run. Is this the bull run? No, it's the start of a bull run, in which one can also be very well in a form of breathing before having a continuation of lethargy, or even why not a retracement, or even a direct gross acceleration. All right? All three scenarios are possible. It doesn't matter much. What really matters is whether we are in a form of denial or not. That is to say, are we in the form of a negation of one of the scenarios? Partly where it is, where you say it can't happen, that means you're not ready. And here, are we in denial? It is very likely that we are in denial. Except that to be in denial, we would have to have communication here that tells us we are going to tank. We are going to 15. We are going to 25. Except that the majority of communication here is what? Pool run. Currently, we are being told that we are entering a bull run because we have the potential validation of an ETF BTC spot from BlackRock, which should arrive. We don't know when, but it should happen. Okay. On this, we take a step back once again. Is this something that is verifiable? Are people trying to influence me with this information? Technically, there is no real validation of the spot ETF yet. These are just rumors. We don't know when. Great possibility that it will be validated. Great possibility that it will be validated quickly. But currently, this is not the case. And secondly, there is nothing to say that there will be an influx of liquidity from institutional investors once the ETF is open. Very important in any case, as long as there is not a transfer of liquidity. If you do not understand this part, I invite you to watch yesterday's very important video in which I explain all that. And last something, technically, did we make a bullish breakout? I want to tell you, yes. Technically, we made a bullish breakout which took place here. This bullish breakout was made in March 2023. It was not performed here in October 2023. We have been in the breakdown of the wick-off accumulation since March 2023. Here we are just in a form of retest lateralization since. So actually, was there any news here different from March 2023? No, not at all. We just broke the period of lethargy that we had for some time, which is a zone of lateralization and ranging, in which we are in fact continuing a momentum which was initiated here, and moreover, which was initiated following behind SVB and the breakout of SVB. SVB being Silicon Valley Bank, and which was the American crisis at the level of regional banks. As a reminder, it was something that was quite catastrophic in the USA, and which was caught up mainly by the Fed, and a major communication effort, and a major money printing effort. However, what is important to see is that factually, there is nothing new in relation to this area. This area we already had information about ETFs, about BlackRock's desire to have ETFs. Nothing has changed. Your strategy that you have implemented here must be identical to what we experience there. We just have a technical confirmation here of a bullish break, and still we do not yet have a pure consolidation. We will wait a few more weeks, but overall we still have something which technically is rather positive, but nothing is different from what we experience there, okay? So, we remain with the same strategy. If there are new elements, we will react at that time. So take this into consideration at the level of your analysis and always at the strategy level. If you are a bull from this area, there is no reason not to be bull from here. On the other hand, if you say that you are still going to 10K while we are at 35K, well, that will be a little more complicated, because you have to understand that at a given moment, when you have a decorrelation with general macroeconomics, and we have endogenous news which is pushing very, very hard, the probability of 10,000 is still very, very low, even if we keep it in mind, because as usual, you have to be prepared to be wrong. And you tell me in the comments, are you ready to be wrong? Are you ready to be right? And also tell me if you like this video. If so, don't forget to leave me a little like before leaving, and we'll see you tomorrow, 7 p.m. for Everyday Life.